Hey, this is Noor ACCA, and today I am going to discuss about accruals and prepayments. We will see what are accruals and prepayments, their examples, accounting treatment at year end, and the accounting treatment at following year. This is really important topic for an ACCA student because it's a really basic concept to accounting. So let's start. Accruals and prepayments. There are two aspects to the accruals concept. One, matching cost to the associated revenues, for example, depreciation and the cost of sales. Means you have to recognize all the related costs to the associated revenues, like depreciation of the asset used to produce the product to which you are generating these revenues should be charged against these revenues. And next we have recognizing transactions as they are incurred, not necessarily when the cash is paid. This also has the effect of ensuring that a profit calculation for a period will hopefully show a sustainable profit, since all expenses incurred in the period will be matched to all revenues earned, even if the expense hasn't yet been paid. Next we have accruals. It's like a definition. Accruals are expense has been incurred, but it's not yet been paid. Often an invoice hasn't yet been received, so an estimate of expense incurred by the year end will need to be made. This means there is a liability at the period end. Examples: estimated water and electricity used, estimated telephone charges for a traditional landline telephone at a month end. And now the accounting treatment of accruals. At year end, recognize this as a liability, since there is an obligation to pay this charge. Recognizing the liability reduces the net assets, so generates an associated expense. Debit expense in statement of comprehensive income, for example, electricity. Credit accruals in statement of financial position, liability. And now the treatment in the following year, like when you pay for this, and then you will pass this entry like debit accruals, liability, and credit cash, for example, electricity. Now we have prepayments. When an amount has been paid in advance, but that cash payment gives a right to receive benefits beyond the current period end. This means that there is an asset at the period end, since there is a right to receive future benefits. Examples: insurance paid in advance for a year's insurance cover, prepaid balances on pay-as-you-go mobile telephones. Accounting treatment of prepayments. At year end, recognize the asset, the right to receive future benefits at the period end. Doing this increase net assets, so generates a source of income. In reality, this source of income will be a reduction in the expense recognized so far from posting cash payments from the cash book to expenses. The entry will be debit prepayment in statement of financial position, asset, and the credit expenses cash in statement of comprehensive income, for example, insurance. And the following period, the entry will be debit expense in statement of comprehensive income, for example, insurance, and the credit prepayment in statement of financial position, asset. And that's all. Hope this video will help you. If you have any query, then contact me, and if you like this video, hit like and share with your friends, and don't forget to subscribe and press bell icon to get notified. Thank you.